Hello Wolfpack, we're back here on Bitcoin today. We've got a bit to talk about. We've had this Adam and Eve formation play out even more. That is a bearish formation that kind of suggests a price reversal. It's when you see a triangular shaped peak structure, a mountain structure like what you'd see in a head, in head and shoulders, followed shortly by a rounding top formation. That is the Adam and that is the Eve, right? And generally speaking, if we're taking a measured move from one of these formations, what we want to go ahead and do is take the measured move from the top of the Adam to the bottom of the Adam, or the neckline, which the neckline is sitting at 19,700, and applying it to the breakout zone. And we can hence see that Bitcoin is targeting the nearest support zone, which kind of coincidentally or not so coincidentally, depending on what you believe on TA, lines up with 17,500, which is actually where we last retested the low on Bitcoin, which is at, the June 19th low during the big crash. That's where we kind of went, 17.5K. And so this Adam and Eve formation not only has confirmed a breakout or a breakdown below the neckline, but it's also targeting the low, meaning that Bitcoin is probably very likely to retest 17.5K. Now, for those of you who think I'm just making this up as I go along, that's just completely untrue, because I was actually saying this a few days ago. One of my video titles was literally Bitcoin is going to 17.5K. We set that up here at 21.4K, and we're currently down, I think, over 13%. I mean, we were down over 13% from that original call. So congratulations. I know some of my VIP members made short positions off of that. And I had someone message me earlier today, said they made 109% profit just based on that preliminary call that was actually free. All right. So that's beautiful work there. But essentially, short-term chart, other than this random fake out pump we had here, which actually turned into being something resembling a shooting star formation of some sort, almost, has turned out to be a fake pump, right? A scam pump, and we can hence assume that the trend will continue downwards, not only by the Adam and Eve formation, but also by the fact that these candles have closed very, very badly, right? We saw a massive irrational pump, and then immediately after that, we saw a huge wick to the upside, right? And then immediately after that, we've actually started closing candles after retests of the neckline. So this could actually be seen as a resistance support flip. Let me get the brush up here. I'm actually struggling to find it. Here we go. Resistance support flip off of the 19.7K resistance, which is, of course, the neckline of the Adam and Eve formation. And so it would make sense for us to trend downwards towards 17.5K at that point, right? Unless, something massive happens that throws Bitcoin completely off course, 17.5K, as per the Adam and Eve formation, as per the resistance support flip we've just seen here, is the logical target for the short term, is the logical target for the next few days, I'd say. So that is how we're looking in the short term. And then zooming out, we can go to the one-day chart. So the one-day chart is looking particularly interesting now, and why I say that is because we're seeing finally that compression on the Bollinger Bands that we've been kind of waiting for. Now, we have been in this vague price region for a half a month, right? 15, 16 days. It seems like a few people are probably getting sick of the market at this point. I mean, even in the last, 7 or 8 days, we've seen consecutive 1, 2, 3, 4, 5, 6, 7 red candle closes. People are getting sick of the market. They're getting done with it. Bitcoin's down, 70% from the all-time high at 69K. They're done with it. I can understand people leaving the market. But the thing is, when it comes to finding the bottom, obviously finding the bottom exactly is very hard to find, and given the macro situation, people are struggling for money in general. But we are seeing compression on the Bollinger Bands, and there is an indication that this market will not just remain boring like it did in something like 2018. If we look at the 2018 price action, we can see, excuse all the random lines in this chart here, but we can see that 2018 literally saw from February 2018 all the way through to November 2018 for a 9-month period. We literally didn't make any progress on the price action. It was just sideways. And then after that sideways price action for 9 months, we saw a 50% correction on Bitcoin. You can imagine, if you weren't there, you can imagine how brutal that would have been for anyone. Sitting there waiting anxiously and patiently, and then after 9 months of waiting, bang, 50% drop. You'd think Bitcoin was dead, right? And I think that at this point, we're still losing critical resistance zones. We're still seeing not only rate hikes in the United States of America by the Federal Reserve, but increases in the magnitude of those rate hikes. I don't think we've seen, at this point, the last nail in the coffin that the 50% drop was in 2018 after a 9-month sideways movement was. I don't think we've seen the final blow yet. I still stand by that. Even though some people would say that, we're retesting a 200-week SMA. Yeah, we've lost it now. We're retesting a macro uptrending line. I think we can bring that up. So for example, a lot of people would point to this macro uptrending line. Let me get it up for you. They'd go to the logarithmic scale. They'd obviously remove the Bollinger Bands, and they'd zoom out, and they do this, and they draw a macro uptrending line stemming all the way from here in January 2015 all the way up, and they can say, okay, look at that macro uptrending line or something resembling that, right? Maybe it's this peak here, I don't know. Look at that macro uptrending line. Look at how we've retested it. Look at how we're bouncing off of it. That could be a bottom indication. And although I completely agree that it could be a bottom indication, it could be an indicator that Bitcoin is in fact bottoming, what I can also say is that it's highly unlikely that Bitcoin bottoms out without some consolidation. And what I can also say as well is that it's highly unlikely that Bitcoin bottoms out in a way that is not interacting, or at least in accordance with the 4-year cycle theory. And the 4-year cycle theory is the ultimate macro trend on Bitcoin. So when you're looking at a macro uptrending line like this, yes, you need to give it some weight. You need to understand that, okay, this is a worthy macro uptrending line. We need to be looking at that. Why do we think it's worthy? Well, not only did we bounce off of it here, we bounced off of it here in 2018. We're also bouncing off of it right now. So yes, of course it's acting as support. Of course it's a worthy line. But, if we're looking at macro trends and we're giving weight to macro uptrending lines, we need to be giving weight to the ultimate macro trend, right? And if we bring up a chart, we can see the ultimate macro trend is, of course, and as I've been saying for, a long period of time now, is of course the 4-year cycle theory. That is the ultimate macro trend. You can look at a line all you want. You can look at how you have 3 retests of a line, but then you can look at a date range trend like the 4-year cycle theory, which has predicted every single major macro top and bottom in a date range format on Bitcoin since the inception of Bitcoin. And you could say, okay, the 4-year cycle is clearly more important than that macro uptrending line, and the 4-year cycle doesn't suggest we bottom out until Q4. Now, this could mean, in some stroke of, whatever, this could mean that we perhaps hang on to this macro uptrending line until Q4 somehow, and then wick downwards, make a new low, and then come back up, and then we kick off the next, cycle or whatever like that. If that kind of happens, and this is all speculation, by the way, if that happens, we could, on paper, hold the 4-year cycle theory, bottom out in Q4, and maintain respect of this macro uptrending line. But it seems unlikely given the macro situation with the Federal Reserve. Now, I'm obviously watching this macro uptrending line, and this is why I said before in the video, we've got an inverted Adam and Eve formation on the shorter term charts. I said 17.5k is likely. Now, we have to consider the fact that this macro uptrending line is obviously above 17.5k. This macro uptrending line is sitting at about 18k right now. And so instead of thinking, I'm going to take a short position until 17.5k because of the 4-hour chart, maybe you should consider the fact that the macro uptrending line is sitting at 18k, and you should lower your expectations for that short position. The fact of the matter is, if you're looking at entering a short position right now, because I've just said we're going to 17.5k, you've missed out, right? Because you're already 13% behind my original call. The call's over. Wait for the next trade. That would be my advice to you. But I think that there are a few interesting things I want to look at Bitcoin other than this kind of stuff here. We spoke about this macro trending line so much that I'm actually getting sick of it myself. What we can talk about is the monthly chart. And the monthly chart is incredibly interesting because we have actually seen, I think we've seen, maybe it's still processing, maybe it's tomorrow, I don't know. But we've seen, and we probably will be seeing, the lowest RSI on a monthly candle close in the entire history of Bitcoin, indicating that Bitcoin is, according to the RSI, the most oversold it has ever been, ever, right? That is intriguing. That is interesting. And a lot of people would say that that is the ultimate buy signal. Now, hear me out. It's not. It's not the ultimate buy signal, right? It's not the ultimate buy signal because, of course, we're going to see the RSI be the most oversold in Bitcoin's history if we have seen, for the first time in Bitcoin's history, a macro bear market on the traditional markets, and hence a strong bear market on Bitcoin. So, of course, these things that have never happened before are going to happen. Why do you think we lost the 200-week SMA? Right? Because something that's never happened before, a bear market on the S&P 500, a bear market on the traditional markets, is happening for Bitcoin. A recession. Never happened before. Of course, it's going to negatively affect Bitcoin. Of course, it's going to bring Bitcoin below levels it typically doesn't lose. And so when I see people say things like, and again, I'm not judging these people because it's a very logical thing to say to a certain extent, right? They say, well, Bitcoin's never lost this level. It's never lost this level, right? And they say it's never lost this macro uptrending line. It's never lost, X, Y, Z. that doesn't matter because we're in a unique phase in the market. I know that invest with the trend until it ends is the premise most investors should be living by, but the fact that the trend is already ending is evidence enough to kind of believe that, hey, maybe we should look at alternative methods of analysis, right? The trend is already ending. The trend has ended for Bitcoin. The 200-week SMA, never lost it before in Bitcoin's history. It's been lost. We've closed 2 weekly candles below it, and we're going to close the third below it, right? You know, the monthly RSI, never lost the 44 level. It's been lost. You know, that macro uptrending line that I showed you before, it will probably be lost, right? It's not certain. That's the reason why I rely so much on the 4-year cycle theory, because the 4-year cycle theory is not based on very, very fragile price points like the 200-week SMA is, like the macro uptrending line is, like the monthly RSI is. They're very fragile. They're price points. Anything can happen to the price. Date ranges are much more logical because they're much less tangible, I guess you could say, right? The macro situation does suggest at this point that Q4 would be the prime bottom, not only for the traditional markets, because rate hikes will be stopping in Q4 or slowing down at least, which would be enough to make the market go up, but the 4-year cycle theory itself, the date range trend does predict Q4 as well. So again, not only am I looking at this is the thing about date ranges, you're not looking at a surface level analysis. Looking at a 200-week SMA and saying, the 200-week SMA has held in the past, and so it should hold again. That is a surface level analysis. It doesn't mean it's bad. It doesn't mean you shouldn't do it. In fact, I've done it myself. But when you're looking at something like the 4-year cycle theory, a date range trend, you're looking at a very in-depth analysis. It's multi-layered because you've got the date range trend, you've got what the data says, and the data says we bottom out in Q4, but then you've also got the reality. And the reality is the macro situation is probably going to be looking slightly better, or at least showing signs of reversal in Q4. And even if it's not showing signs of reversal in Q4, you need to understand that the traditional markets generally act as a predictor of the future. So before the macro situation looks good, the S&P 500 will bottom out. That's very important to understand. Just as, you know, if we're looking at history and we're looking at what happened last year, just as, zooming back here, let me get rid of all this stuff so you guys can see it. Just as, you know, before we even saw the first rate hike, which by the way is the reason the market is going down, because rate hikes kind of go hand in hand with recession. You know, before we even saw the first rate hike, in fact, months before we saw it, the SPX has already started correcting. And so in the same logic, before we start to see rates decrease, the SPX will most likely start to bottom out and start to actually go upwards. It predicts the future. It moves in a way in which the future is predicting. And so with that logic, it does make sense that Q4 would be the macro bottom on Bitcoin. Again, I've gone over this many times. I'm just kind of going over things I've already gone over. I don't want to do that too much for this channel, but it is worth doing because a lot of people don't seem to get that point. They seem to be relying on this analysis where it's like, you know, oh, this hasn't happened before, it can't, you know, it's not going to happen now. If something's not happened before, it's not going to happen now. Invest with the trend. You know, and it must sound so confusing as you guys who follow me, who know my channel well, who followed my channel a lot in the past, saying, you know, for me to say this, because I've actually been one of the biggest supporters of the phrase, invest with the trend until it ends. And I still believe it's a great method for trading. However, we have not, you know, the trend is ended. That's what I'm saying. I suppose that's what I'm trying to say in a kind of rambly manner. The trend is over, right? So invest with the trend until it ends doesn't apply anymore. We are in no man's land. We are in a scramble for evidence, all the evidence we can get to find the bottom. This whole invest with the trend until it ends, oh, this line's never been lost before, it's not going to be lost now. It doesn't apply anymore because the trend, the main trend, the most important trend, the 200-week SMA on Bitcoin has been lost, right? So that's very important. That's very important you understand that. Flicking back to the daily chart before we end the video, just going over a couple of things. I suppose, you know, 2 days into the next weekly candle close, the monthly candle's just closed the most red it's ever been in its life. In fact, I think the monthly candle was a minus 40% candle, which means that is the most sharp correction in terms of percentage we have seen on Bitcoin in its entire lifespan. And that might become shocking. You might not believe me there, but I actually think it's entirely true. I think we have never seen a minus 40% month on Bitcoin. We just saw it in June. That just gives you an understanding of how far gone the invest with the trend until it ends, you know, quote is. You know, it doesn't apply anymore. The trend is over. We're trying to predict. We've got no evidence. We're scrambling for evidence, and we're trying to predict based on very minimal amount of evidence. And the evidence that I'm going with, and the strongest thing that I can see right now, and the only area in crypto in which I think the trend is still sustained, is in the date range trends. And that's why I think the bottom will be in Q4, but I don't exactly know what price it would be at. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers. So if you go to my YouTube channel and you click on the join button, you can gain access to Wolves of Crypto VIP membership via the YouTube channel. We'll post all the exclusive content in videos that only the VIP members can see. We've got Altcoin Trading Signals, exclusive access to my charts, 2-hour video on market psychology, and Prioritised reply to comments, as well as other stuff there just for 28 USD a month, less than $1 a day. Not going to get much better of a better price than that. And then we're looking at the Crypto Academy, which is a Become a Trader 10-unit course developed by myself and Mega Crypto. Basically a TA course, technical analysis course, putting in way more effort than other TA courses. We've actually got worksheets, and we've actually got kind of tasks and task books and a trading diary. You know, all the other courses you're going to find are just going to chuck information at you and just hope you learn it. We're actually focused on letting our clients, letting our customers, letting our students, whatever you want to call them, actually learn the content so they can actually find trades effectively and trade effectively and competently in the future. Check out that at cryptoacademycourses@gmail.com, or just check out the website there. And then moving forward even further, with the VIP membership, you're going to be gaining access to BitGet. Not gaining access, but you should be using BitGet with the VIP membership. And even as a free member, even as someone who's just watching the channel casually here, BitGet exchange is the one you should be using. That's the exchange I personally use, especially for futures. Why is that? Well, it's got half the fees of Binance, and Binance is most popularly known as the cheapest exchange. So obviously it's not, right? BitGet's the cheapest exchange here. Half the fees of Binance, non-KYC. You're looking at futures on around 56 pairs, developed by traders for traders, and that's what I like about BitGet. And if you sign up using my referral link below, you'll get access to an exclusive reward center, and in which you can gain access to, over $4,000 in rewards for completing some tasks there. So interesting stuff for sure. Use my referral link to sign up. That would be highly appreciated, in which you're supporting the channel there. So thanks for watching. Hope you enjoyed. I'll catch you in the video tomorrow, and have a good day. Cheers.